Hello traders, welcome to your economic calendar update for Friday the 6th of February 2015. Well, overnight we had a little bit of data coming out which was positive for the US dollar slightly and also for the Canadian dollar. And what was interesting is we've got oil and having a rally, which is also going to support the Canadian dollar. So I'll be talking later on about some chart patterns on how that can affect some things coming up later on tonight. But Friday is non-farm payroll day, and the market is focusing on that, and also some more Canadian data, the unemployment rate and some building permits and net change of employment. So that's what the market's going to be focused on. It may be quiet leading up to this event, as we do not have much other data for the market to be really wanting to sink its teeth into. So as always, volatility could be quiet and then become a little chaotic in 6.5 hours time. So keep that in mind if you're trying to do some trades. Don't expect big, long, large pip movements, and we will have a look at that in a bit more detail in the technical video. But overnight we've seen the short squeeze in the euro continue, where the euro versus the US continue to rally, and this is on the back of the Greek government coming out and assuring everybody that they will come up with a deal. And the market enjoyed that, but also the EU upgraded the GDP forecast. So that was quite positive. I'm not sure how they come to that assumption that they can upgrade when there's been no signs of the economy's turning around just yet. But we did have German factory orders surprise to the upside, so that was quite good. And the rumours of the SNB interfering with the euro versus the Swiss franc again, that jumped back into the market, but this time it was perhaps they're moving into the euro versus the US dollar, buying euros to weaken the franc. So there was that. And also with oil having a rally, that does affect Europe heavily because they are large consumers of oil and producers and whatnot. So we had oil recovery also boost the risk appetite within the market. Having said that, we've got non-farm payrolls, and the market's already started looking into that. And last night, as I mentioned, we did have some indicators coming out to inform us of what we can expect for the non-farm payroll. And unfortunately, it looks like the non-farm payroll, based on all the metrics you put together, is likely to come out weak. And the market is intelligent enough to figure this out. So they started taking profit on the US dollar, and that's why we've seen pairs against the US dollar have a bit of a rally overnight. So that's the fundamental reasons behind the moves last night. That they weren't there was no technical reasons. It was all fundamental and mainly market sentiment. And we are speculators and we are trading market sentiment. I can't emphasize that enough. So having a good understanding of that helps you make informed decisions and understand what's going on in the market. So we have the Canadian output expected to be the unemployment rate and to be quite positive. Now, if this is quite positive, we're going to have another positive night for the CAD. And we've been doing some trades shorting the US versus the CAD based on oil bouncing, but then we've also got some Canadian data metrics being quite firm and solid. So that also adds a little bit of support to the Canadian dollar. And I expect there's to be some support broken tonight, especially if we get weak non-farm payrolls. We could see some profit taking in the US dollar to a greater extent than what we have. The US dollar's had quite a big rally, and we've seen that continue on for months and months, and perhaps this could initiate a large profit taking, and we could see the euro go a little higher. And we could see the pound go a little higher. And it's not to do with those particular economies, it's all to do with just people taking a bit of profit, saying that, okay, well, the US just can't continually deliver 300k in non-farm payrolls month after month, and the metrics can't just keep getting better and better and better. At some point, it has to have a plateau. And when that plateau comes in, like we potentially see, we could see some profit taking. So that's something to be aware of. So potentially some quiet market conditions and potentially the start of some profit taking in the US dollar rally. And yes, that could mean that the Australian dollar could go higher even though they cut interest rates, and it doesn't make logical sense for now, but in the long term, I think the Australian dollar will be sold off, likewise the euro, likewise the pound. And we could see the US JAP definitely break out of that range tonight, especially if we have some bad numbers. And with that, we could see the yen crosses also present some trading opportunities. So the technical video is going to be providing a bit more of an insight into that. And there's not much more I can talk to you about with the fundamentals expected. We've spoken about Canada, we've spoken about the non-farm payrolls. That's the focus of the market, and that's what we should be looking out for. We just need to be conscious of some trading opportunities that we could potentially make a few bucks before the weekend, cash out, and we'll start next week fresh. So that's it from me today. Make sure you do log in and have a look at the non-farm payroll technical video I put out straight after this one. And have a great weekend. And until next time, trade well.